Happy Friday, everybody. In this video, we're going to talk about some Bitcoin news regarding Samsung and their phones. We're also going to talk about what the spot ETFs for Bitcoin have been doing lately. We've definitely been seeing some inflows if Bitcoin's price isn't a big enough hint. We'll also go into some other recent news as well. But this is pretty interesting today. Samsung brings Coinbase access to 75 million wallet users, essentially making it easier for any owners of a Samsung device to buy crypto. While this was first announced in July, this collaboration now allows Coinbase users to purchase crypto directly within the app using Samsung Pay, streamlining investment management on their platform. Drew Blackard, Senior Vice President of Mobile Product Management at Samsung, said Coinbase is a leader in the industry, which makes them an ideal partner to provide our users with seamless access to crypto. We're continually working to find creative ways to enhance the experience with added functionality. Now, I want to give you guys an update on Bitcoin. Bitcoin has been running fantastically the last couple of days. It reclaimed its 50 MA and we have been up ever since. We also got a bounce right at this trend line, this multi-month trend line that we've been following for quite a while now, ever since April of 2025. Bitcoin is now near its all-time highs. We are talking like a 1% or so. It might even see new all-time highs by the time you watch this video. My $150,000 target for Bitcoin is about a 21% move away. I personally wouldn't be surprised if we see 150K this month. I do think more likely though we'll see it by the end of this year. It isn't just going to be up only, of course, but Bitcoin can easily make a 21% move in a month. I really wouldn't be surprised to see it. Bitcoin is touching overbought now on the RSI on the daily. Don't let that fool you out though, because we see that before. We saw an overbought daily right here, and Bitcoin still ran another 20,000 essentially before its next cooldown. If we do see Bitcoin break its all-time high, I do think we'll see a nice rally. Otherwise, if we get caught up here, we might see a little drawdown, head towards possibly 117,000, test this area as a support, this previous resistance, retest it as a support. You know, we also saw this bit of a inverse head and shoulders. There's a head, there's a shoulder, there's a shoulder, kind of like we saw back here. A head, a shoulder, and a shoulder. Rallied after that. We've got a nice rally here. And we are in October, typically a fantastic month for Bitcoin, especially on a peak year. Here's October last cycle. We went from like the 40,000s to about $66,000. We gained almost 20,000 just in this month. The 2017 cycle top, we saw Bitcoin at about 4,300 in the beginning of October, and it ended October at about double, at about $7,000. So if we see Bitcoin do what it has done in past cycles, we should see a fantastic October. And I do expect, at the very least, we will see new all-time highs. Maybe 150,000 is a little early to expect by the end of this month, but I do think we'll see it by the end of the year. One thing that's been helping Bitcoin out this week is inflows from the spot Bitcoin ETFs. We've seen about $600 million in inflows, and Ethereum also has been seeing some nice inflows, 307 million there. Citigroup sees $133,000 as a more realistic year-end target, with 181,000 coming in the next year or so. I see that they don't pay attention to the cycle at all. Don't be surprised to see another one of these banks get it wrong. I think their year-end target is way too conservative, and their target that's 1 year away completely ignores crypto winter. Now, maybe cycles play out differently, but if the past is any indicator, we should see a rough 2026, a great opportunity to accumulate Bitcoin again, similar to 2022, when Bitcoin dipped all the way down to 15,000. But you never know, maybe the cycles play out differently. Maybe we see more support, being that we have so much institutional adoption. The spot ETFs might continue to prop Bitcoin up a bit, and the pullbacks won't be as severe. I do still see 2026 as hopefully a great buying opportunity, with some pullbacks along the way. Some fear and some pain and some worry. Bring it on, please. I would much rather see that than see Bitcoin get to 180,000. Now, because of this government shutdown, we're missing out on some key important economic data. Although we did see ADP's National Employment Report that was published on October 1, and we found that private employers shed 32,000 jobs during September. This is an indication that the job market is continuing to weaken. And unsurprisingly, we have a very high likelihood of a rate cut in October. This was previously like a 15% chance of leaving rates the same and a 85% chance of a cut. Now we're like a 98% chance of a cut, a 2% chance of leaving rates current. A lot of this is due to horrible jobs data. It's definitely not due to inflation being at the Fed's target. CPI, PPI, PCE are not at 2%. So the main reason for cuts right now is not because inflation reaching the Fed's goal. It's something actually kind of worrying. It's job data. Be that as it may, we are still really looking like a high probability of a cut in October, further pushing risk on assets even higher. Now, I did want to finish this on CleanSpark. CleanSpark has been running a bit. We broke $15 finally. This was a pretty notorious resistance. You saw a big reaction once we didn't hold it back here in November of 2024, and it became a resistance area at times. Also a support level in early 2024 before it broke and we saw a major reaction. So keep an eye on 15. If we bounce at it as a support, that'd be a fantastic sign. I wouldn't be surprised to see CleanSpark cool down a bit. It is pretty heavily overbought. And I want to show you something here. We do have a bearish divergence. Unless we see the RSI suddenly hit a new high, it looks like a bearish divergence may play out. We see a higher high on the price, but a lower high on the RSI. We can't just pay attention to the bullish divergences and ignore the bearish ones. This is a clear bearish divergence. Like I said, unless we see the RSI hit a new higher high, which doesn't look like it's going to be the case. The last divergence we saw was a bullish one. Back here, we saw higher lows on the RSI and we saw lower lows on the price. We did see a nice pop after this bullish divergence formed. But yeah, CleanSpark is quite far away from the 50 MA, the 200 MA. The 50 MA is right now at $11. The 200 MA is at $10. And the price is at 16 something. I would not be surprised to see it cool down a bit, consolidate, let that RSI reset a bit, so we can get the juice we need to go on our next leg up. But you know, this is the time for the Bitcoin miners to shine. If we see Bitcoin continue to break to new all-time highs, the companies that hold a massive amount of Bitcoin, I think, will benefit the most. The CleanSparks, the Riots, the Maras. Those Bitcoin companies that hold a massive amount of Bitcoin, that when we see Bitcoin move massively, they see an instant boost in value of their balance sheet, basically. And CleanSpark is one that's been seeing that. Heck, a lot of Bitcoin proxies have been seeing some nice moves lately. As we get to the end of this year, you definitely want to be trimming a little bit, if not selling completely. Depends on what you see coming into the crypto winter. Do you believe that crypto winter will play out as past ones have? Or do we keep running into 2026? That's what should shape your opinion of if you want to just trim a little bit or if you want to sell everything. That's up to you to decide in the end. And also consider that, you know, as these Bitcoin miners run up, if they're becoming a larger percentage of your portfolio, you might want to trim to kind of keep your portfolio more balanced. If your CleanSpark was originally a 5% position around $9 or so, and because of this move, it has brought your position to a 10% of your overall portfolio roughly, you might want to trim and bring it back to that 5% if that's what you're comfortable with holding. And the same can be said with any of these other Bitcoin miners, especially Iron that's ran so much. If it was originally a 5 or 10% position to your overall portfolio, and now it's become like 20% of your whole portfolio, I think it's a good idea to trim, to manage risk. Risk management is number one in the stock market. But what have you guys been doing lately? Have you been accumulating more Bitcoin miners this late in the cycle? Have you been trimming into strength? Are you loading up on altcoins lately? I think this is kind of the last opportunity to do so. But yeah, thanks as always for watching, guys. I will be putting out a CleanSpark video regarding their mining update. I know that just released. We'll talk about that in a future video. Thanks as always for watching, guys, and enjoy your weekend.